BIIB, Biogen. Yes, we made all-time highs on it up here at 240 and some change. We had a big reversal. Now, that was over a $30 reversal, and this is a weekly chart. And it is just like the S&P 500 chart. You would take BIIB and refer it to the S&P 500 chart because that's what you're going to do. The dip buyers moved in massively. Look at the high up here on this weekly bar was 235 down and 210, 235. That's a $25 range. Now, on a daily level, you can clearly see that on a daily level where it gapped down and it sold down, but look at that red line. That's a rising 50-day moving average. Looks just like the S&P 500. Refer to the S&P 500 to Biogen, or Biogen to the S&P 500. As soon as it got here, it hit it, it undercuts it. They came back, they dipped it, they bought it, they gapped it on Friday. 230 is going to be the wall of resistance, and then ultimately a double top V shape, should that come into play, will be right below 235 on Biogen. It is the leader in the biotech. Now, when we go to a 60-minute chart, you can clearly see over here where that major reversal happened. Just like the S&P 500, you get a counter rally and you got a sell off in a 60-minute. Once you get down here to the bottom on the 60-minute, they came up, they sold back into it. These are minute period moving averages, MMTs. These are not daily or weekly. The 10-minute crossed over the 20, as it did, and then it consolidated Friday right here. It made that 228 high and then pulled back and got support. Now, when you look at this on a 30-minute level for intraday, you can clearly see here at 214 on that calendar day at that bottom, he pulls it up. It's going to have a range, and this is a 30-minute level on Biogen. It's going to be a great trade. When it comes up to the next high, it wouldn't be abnormal to see it trade up to 230. We would look at the 230 puts, and of course, the lower end of that support level is 220. So we're going to benchmark it starting trading on Monday. And we're going to use the various different time frames. Here's a 5-minute chart. You can see how it consolidated. Okay. The thing about it is how we're going to set all of these trades up. We're in the middle of June. Stocks have their counter rallies, bull rallies. The good ones are worth buying the calls on and keeping them anywhere from 2 to 5 days. When they get oversold or when they're testing major moving averages. These are the ones to buy because that's where the money is buying the dips. I'm going to conclude BIIB. I'm going to conclude that I've gone over the daily chart, which is here. These are the daily moving averages. This is going to be the wall of resistance on a daily. Going to conclude, once again, the 60-minute chart, that you can see the same area right here where the last reversal was to that low will be that major wall of resistance moving up. Therefore, we will be loading the 230 weekly and monthly puts options at this wall of resistance. And when we gap down to these support levels, we'll get net long, and it'll be the $220 call moving forward starting on Monday.